All right, so today I wanted to do a video on ASML Holding. Again, this is a European semiconductor producer, one of the bigger ones, 226 billion euro company. Again, a company that I've been watching for quite a while. I've always found it to be too expensive, but I think it's bordering on if it's cheap enough to pick up. So again, let's get it right into it here. Again, 1.07% dividend. If we look at the insights here, financial health is pretty good. Again, 1.3 current ratio. They are buying back shares. The growth is solid, right? I mean, revenue, gross profit, operating income, net income going up very significantly, although operating cash flow is barely going up. Profitability, very good. Very, very good. Not like the best you've ever seen, but again, very good. Management also does a very good job. 60% return on equity. That's crazy good. Up 219% over the last 5 years, which is crazy. If we look at the valuation, though, price of free cash flow of 38, price of sales of 9. That is below the 5-year average for both of them, but I still think that's a little bit too expensive. I would like to, I'm going to get into it in a second here. Let's check out the financials first, and then I'll get into that. If we look at the balance sheet again, they do have more assets than liabilities, which is something you always want to see. If we get into the cash flow statement here, again, this is also very important to look at here. Free cash flow did top out in 2021. They are down, although they're significantly above 2020 still. I think 2021 probably was a bit of an anomaly for this company, which is why you're seeing this correction. They are buying back shares. They haven't issued a new share since 2016, which is very good to see. They bought back a crazy amount of shares over the last couple years. They did take on quite a bit of debt in 2020, though, which is kind of odd. Other than that, you have to go back to 2016 before they took on debt. They have been slowly paying that down. So again, if we look at the free cash flow here, it's grown fairly nicely over time, right? But 2021 was just crazy good. It'll probably take a little while to get back to those numbers, but I'm interested to see what 2023 looks like. If we get into the metrics here again, you're also going to see 2021 a bit of an outlier here. Let's go back up to the top. Okay, I'm not able to get that to load here, but let's go into the free form just because that's very important to find out the valuation of a company, because again, you always want to make sure you're buying a company for a good price, because there's a lot of really good companies out there, but they're expensive, right? You take a Microsoft is a good example of this. Again, good company, but they're expensive, right? Nvidia, another good example. Tesla, another good example. Good companies, they're just too expensive, right? So again, if we look at this company here, in my opinion, a pretty interesting emergence comes out, right? If we go back, let's go back to 2014, roughly, 2014, 2015. And one thing you quickly notice that as far as operating cash flow goes, this company never goes below about 15. Right? And it's only went above 45 once, right? And that was in 2019, 2020, right? So, and if you look at about 30 is usually where it tops out. It has gone above that before, but again, about 30 is where it tops out, right? So where is it at right now? It's at 26.9, right? The average is 27, right? So it's almost exactly on that average, which is basically telling you it's about fair value, right? It's about fair value. If we look at the operating cash flow per share over that time, it's grown 24% per year, which is very, very good. That's crazy good, right? The highest it was in 2021. Again, the highest it traded as far as valuation was also in 2019, late 2019. So again, in my opinion, you're looking at almost exactly fair value right now for this company. Although personally, I think you're going to see it come down a little bit more, right? A little bit more. So like I said, I'd like if it got down to like 550, that's where I'd really like to be picking it up. But frankly, anything, let's say 5% below where it's at right now, that's where I would start picking it up. I probably will start slowly nibbling, although I'm going to keep an eye on the price, right? If we look Year to date, actually, this company started out really low this year. It actually started out at about 550. Although, I mean, if we look at from its high on the year, it's down. What is it down? It's down about 21% from its high, right? I mean, if we look at its all-time high here, let's look from its all-time high. It's down about 31%, right? So, I mean, you got it crazy cheap. If you were really lucky if you got it in that dip in 2022, because it was down. I mean, it was down 54% roughly at one point, right? So that's pretty crazy. The last thing here I'll touch on is the dividend. This is another thing that really impresses me about this company. Again, they've raised their dividend. They started paying a dividend in 2018. They're up. I mean, the first year it was, what was it here? 1.69 a share. Now it's up to 6.3. So that's like what? More than probably quadrupling its dividend in a matter of 5 years. That's crazy growth. I mean, they've raised it every quarter basically since 2020 now. So again, that's another thing I really like about this company. I mean, if you'd have bought it 10 years ago, you would have a 7% yield on cost. I mean, that's really, really good. I mean, if you go back even further here, let's go back even further. If you'd have bought it, let's say 20 years ago, you'd have a 58% yield on cost. Like, that's just utterly insane. So that's another thing that I really like about this company. Again, dividend growth, in my opinion, is where it's at, because dividend growth combines the best of both worlds. You get that nice share price return, but you also get a nice dividend 20 years down the road, right? That's exactly what I'm investing for, and that's what I think everybody should be investing for. So again, to basically summarize it here, I will slowly start nibbling at this company. Personally, again, this is all my opinion. Do your own due diligence. Also, if it goes lower, let's say that 550 range roughly, that's when I would really start to kind of amp things up, right? Again, everything here, all my opinion. Do your own due diligence. Again, if you like the video, please like, subscribe, comment, all that good stuff, and stay tuned for more.